Okay, good morning or good afternoon, depending on where you are. Welcome to Weekly Take on the Market. It is Friday, May 16th, 11:15 Pacific Standard Time in the morning, obviously. This was the best time for me to do the video. Market's pretty quiet. I don't expect any drastic changes here in the next hour and 45 minutes. I'll be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here in Investors Business Daily. The disclaimer, please take a moment to read it. It's important so that I can speak freely on this call by having this disclaimer. Okay, market indices. I'm going to skip the industry groups. You guys know the drill with the industry groups. I'd like to think of, you know what? I know I get a lot of emails. I'm curious if there's like a section that you guys think I could be covering instead of the industry groups. It's not that the industry groups aren't important. It's just that it's kind of the same thing, and maybe that's why I tend to skip over them. I feel a little bit bored, like on that when I get to that slide. Wish there was more. Maybe I'm gonna try to think about this, like what else I could fill in there, or how I could liven up the industry group section. So we'll do stocks to watch, and then the quote. So the only slide I have is the sentiment, and I don't want to beat a dead horse, but I kind of like sentiment. I know it's a secondary indicator. It's not going to be Bill's favorite or would have been Bill's favorite, but I don't know. Maybe it's just my personality. I think there's something to it on the sentiment standpoint. So we did get a few more bulls. We lost some bears with the rally the market's gone through, but it's not over your skis bullish. I just am kind of surprised, honestly, that the reluctance to embrace the rally by the average investor, at least in the sentiment polls, right or wrong, this is what they're showing. I know today the consumer confidence came out, Michigan won, and everybody's looking for like 7% inflation or something, which is, I'm no macro expert, no economics expert. That just seems a little bit high, and so the people are kind of pessimistic about everything, at least in that survey and this survey. We'll have to wait and see. So I don't want to say that it was, I don't want to use the phrase no surprise the markets rallied off the lows, but although that's the first thing that comes to mind, because when sentiment got so bearish, that's usually what happens. It wasn't easy. I tried to be long down there, and just they'll test your mettle. It's not a great timing indicator, and they're going to test your resolve, test your conviction. And I tried to buy a couple of times, got knocked out of the box, and in the end, the S&P is 20% off the lows, kind of like what I thought would happen, maybe not as fast as it happened. So this is why I look for sentiment at the extremes, especially bearish sentiment. If this gets really, really bullish, it probably won't work as well as it did the other way. Okay, so let's jump to the charts, and I'm going to turn off my camera. And this is the second time I've done this video here, so bear with me. I do not want to mess this up. I had my screen paused. So I'm on round 2. All right, you are screen sharing. It says you should see a chart of the NASDAQ. And it's been pretty relentless on the way up. And relentlessness is good. It tends to portend higher prices because there's a lot of maybe trapped money that's not in. And so it's holding up really, really well, the market. I actually think the only way you're going to get people to finally buy in is this to new highs. So I actually think that's in the cards. And then if you want to look forward and be bearish, if it did that, then I think you can be bearish, change your tune. But right now, I just don't see a lot of reasons to be bearish. I could be wrong, and I'll change my mind in seconds sometimes, or minutes, or days. But it's just every time I've tried to be bearish with a single position here or there, it's been very little success. So if any, so it seems like the market wants higher prices. It reminds me very much, and I've done this before, of the 1998 rally. Let's jump to December of 1998. And I want to go to about right there, 1127 or 1125 should be fine. And this is a bad tick. It did not do that. So bear with me here. That bar did not go all that way down like that. But you can see how kind of relentless it is to the upside. You had 1, 2, really 3 reversal days that couldn't, or maybe even 4, but this is the only one that could actually go down the very next day. And then, boom, boom, back up. And it took from the follow through day, or from the low of 1400 to almost 2000 before the NASDAQ was even down, had a day down 1% or more. So it rallied 14. Let's just use 1400 just to make the math easy for myself. 600 divided by 1400. Oh my gosh, is that right? 43% before the NASDAQ even had a 1% pullback. That's incredible action. And I remember this, not that well because it's a long time ago, but I do remember feeling trapped on the outside looking in. I wasn't as invested as I obviously wished I had been. And a lot of people probably were, which is why it was so relentless to the upside. And if we look at like the weekly, you can see, let me spread this out to like May of 1999. And you had this big period where the market kind of didn't go anywhere, and then it ran up, and ultimately the bears were right. But look at the move before they were ultimately right. 2,000 points roughly on 3,000, 67%. So a massive, unbelievable move. I don't think the market, because we've been in a bull market for long, but this was a bull market for a long time as well. In the end, anything can happen. I absolutely 100% believe that. You have to be prepared for anything, flexible to any possibilities. But you can see how if you get rigid in one view, like, oh, this is a bear market rally, or the market has to do this, or it has to do that, or it has to test the lows. Saw that on YouTube. A handful of technicians feel like this market needs to test the lows before it can go higher. And I would say, no, it doesn't need to do anything. In fact, if it tested the lows, I'd probably be really bearish because you have a lot of people trapped on the outside that wish they were in. So it is what it is. It's the turkey story and reminiscence of Stock Operator. It's a bull market, and in a bull market, there's only 2 positions, long or neutral, or long or on the sidelines. You don't have to be pedal to the metal. I'm not. I'm not 100% invested in my cash accounts and 200% of my margin. I don't feel like there's as much quality merchandise as it seems like there would be for this type of rally, but there have been a handful of leading stocks for sure. Okay, so there's the NASDAQ. S&P is going to look pretty similar. Like I said, I think it's going to go up here. And then at that point, you have 2 scenarios. You almost always, not always, but almost always, new highs in the market are very bullish. So when you make a new high, you tend to make some progress, some type of leg up. But if it doesn't, so try to make a new high here, came down, try to make a new high there, came down, then that's a really good bearish signal in my humble opinion. So we get up here, try to go up, and then come back down through these lows. I'm going to get fairly to aggressively bearish in that type of scenario. But I don't have to do anything with that game plan at this moment. So at this moment, I think you want to be long to neutral, and just kind of look for setups, take them. I still like to take profits, right or wrong. Sometimes it hurts me, sometimes it helps me. I give up some good ones, but then I'm, out of some of the ones that give back. Let's look at gold. So it looks to me like gold is at least short term. It's hard to see, but that looks like a uh, kind of a hit upper channel line sell signal, and it's right on the 50-day. It's down, I think, maybe 10% off the low, but let's see how gold plays out. Bitcoin, it's so funny. I bought Bitcoin here on this little reversal, and then in last night, in the after hours, I think maybe it was 59.30 or something, and I was up like $1, and I just couldn't help myself. I just don't have any conviction in it, and so I literally owned it for less than 24 hours. That wasn't the objective. I would like to. This chart looks really strong, and I think fast forward, I'm probably going to be sorry that I did that, but I just have a hard time having any conviction in that. World markets quickly. Germany, nothing wrong with that, holding up really well. Poland, it's kind of a esoteric name, but acting really well. I think I mentioned Greece, acting really well. I think Brazil is trying. I wish it would stop doing that. I need to bug shoot that. Not all that exciting. I don't own any of these ETFs that I mentioned. AVDS. So new high. I don't know what is going on here. I think I need to relaunch my charts. Bear with me, guys. Apologize. I don't know what's going on with that. It looks like a bad tick to me for sure. Holding up really well as well. So overall markets, fine to great. Let's go to, is there anything else in the market arena that I wanted to? I can't think of anything. So let's go to stocks. So we always kind of, well, we don't always, but let's start with the big boys. NVIDIA looks pretty good. The relative strength's not all that great, but it's a big cap. This looks pretty good. I did buy it, and just again, the problem I have with NVIDIA is I just don't know where the incremental buyer is going to come from. I've talked a lot about it. The central bank of XYZ, the sovereign fund of XYZ, they all own NVIDIA. So who's left to push the stock higher? I don't know. And when I owned NVIDIA, I just couldn't stop thinking about that. I looked at the mutual funds, and it's just loaded, right? So here's Fidelity Contra. They've got 94 million shares. At one point, he had 100 million. Let's say he wants to take it to 100 million again. He's going to buy 6 million shares. Is that going to move the needle? No, but it's just packed with all these funds that are just, they're full of stomach. There's just no more room on these things. So that bothered me for NVIDIA, but it's definitely leader in the big cap area. Microsoft, I sort of feel the same way with Microsoft, but I've thought that for years and been wrong. So I don't know why if that's a good thought process. Apple looks really tired. RS of 37. Like if I got bearish, this would be one I would go to on the short side. Google, I'm indifferent to it. Amazon doesn't look bad. I'm indifferent to it. Tesla. So Tesla should have been bought. I think Mike Webster was talking about buying Tesla coming out of this like quasi little cup with handle here. It's acting really well. I don't own Tesla. Sometimes every once in a while I'll have the desire to short it, but it doesn't go down. So what's the point? So there's if I need the price to confirm. What else is there on the big cap side? I think that's it. So let's talk about like leaders. So Hims is a leading stock, and you had to kind of buy it kind of off this double bottom, but acting really strong. It's pretty volatile right now here, but um, that's a leader for sure. That's something you could have owned. Palantir is a leader, something you could, and probably a lot of you do own. Deep base, to me, if we turn pattern rec on, they've got this as a cup. To me, it was a double bottom, and I owned it through there somehow. I don't remember, somewhere in here. And the way I handled it, the earnings, is I actually was short PTIR and long Palantir. So PTIR was double, and PTIR went down a lot on the earnings day, 24%. And Palantir, of course, would go down on that day, but came back. So it worked out pretty good for me. I'm no longer in it, unfortunately. I did not expect it to make a new high. So I got out of the short, and when it did that, I got out of the long and thought I was a genius. What a play. And 10 points later, I should have kept the stock, but it is what it is. I handled it fairly well considering what happened on the earnings. But this is a leader. CrowdStrike's kind of slowed down in the leadership category, but it's holding up. That's a leader as well. Coin. So exhibiting some leadership slowly but surely currently. MSTR. I don't know. I don't think I could buy it. I just don't understand. You buy Bitcoin and just hold it. I'm not sure where the business is. So I won't own MSTR, but it's hard to argue with the leadership of the stock action. Duolingo. So you have some ants here. My experience is ants mean pullback. So pullback to the moving average, something like that would be how I would want to enter that if I was considering that one. Carvana. Leadership, breaking out. Hood, double bottom. Actually looks a little bit more constructive than Hims, but this is leadership as well. So, to me, I'm sure I'm missing something, but to me, it's Hims, Palantir, Duolingo, Carvana, Hood. These are the I don't want to say semi-speculative, but these are the growthier leadership names that are out there, versus like Nvidia and Tesla are a little bigger, on the bigger growth side. Hard to grow because they're so big, but those are leaders as well. So 1, 2, 3, 4, 5. That's five names that you could have had. Probably not going to have them all, but that's 5 possibilities right there. On the speculative side, and I don't know, I tend to gravitate to more speculative stuff because I like the stuff that moves. He had Tempest AI. So again, all the same patterns. They all kind of look the same, but I bought this and sold it, and it went from 55 to 70 in a handful of days. So, but this is acting all right in more speculative leadership. Oklo, kind of like a Tesla type base, speculative leadership. NBIS, I do own this one. Same thing, Tesla type base, speculative leadership. QBTS making new highs today, super speculative leadership on that name. So there are some animal spirits out there in the market, and you've seen it in some of these stocks coming off the bottom. All right, I think that's it for the stocks. And let's go to the quote of the week. Am I sharing my screen? I am. All right. So somebody asked about sizing in an email, and I cannot answer or talk about some of these questions that I get in an email due to compliance, but I can because in these videos because of the disclaimer. So sizing is very, very important. It's very difficult, and a lot of people have issues with it. Even for myself, it's the well. Here's Stanley Druckenmiller. It's 70 to 80% of the equation. That seems a bit high, but that's why I like this quote. Is he's basically trying to emphasize how important it is to size correctly. You have to have enough of the stock that it makes a difference, but not too much that you can't handle it correctly. I just listened to a podcast today on Amazon's split adjusted IPO price. It was 8 cents. Incredible. But along the way, it had, three 70% corrections. It had a 90% correction. And I'd be willing to bet there's nobody alive that has 8-cent IPO Amazon stock. In fact, in the podcast, very interesting. I should have pulled it up, but Amazon was priced at 18. It opened at 29-ish, they said, and immediately fell apart down to 15. And the guy that was being interviewed was part of the deal team. And Deutsche Bank was the lead underwriter, and they had to go in there and support the stock. They literally had to buy, I think he said they had an order to buy 1 million shares at 15, and it was priced at 18. So it just shows you how things, it's in hindsight seems so easy, but in real time was very, very difficult. So back to the sizing part, it's very important. You can run around all day and tell your friends you own Facebook or you own Tesla, but if you don't have enough that moves the needle, I keep calling it Facebook, I know it's Meta, that it makes a difference. If you're worth $10 million and you have 100 shares of Meta at 30 when it came out of that first base, it's great. You bought it at 30 and now it's 200 or whatever, but I don't know, it just didn't really move the needle for you if you have a $10 million net worth. But what I find out is a lot of people say, well, I could never put $1 million into a stock, right? So if you had a $10 million net worth, a 10% position would be $1 million. And a lot of people are like, I just can't risk that. And that's the part that you have to the mental aspect is, if you have a stop loss, if you have a plan to get out, if you're wrong, you are not risking 10,000, 100,000, $1 million in that name. If you put 100 grand into the next leading stock, you're risking 7 grand. Max loss 7%. You're out, no questions asked. Now, could it do like Alibaba did and gap down 10% on earnings, and you have a 10% loss instead of a 7%? Yeah, that can happen. But then that's all the more reason to get out. Could it gap down 20%? Yes, it could. It's not likely. It doesn't happen that often, but it could. That could happen. All the more reason to be out. So if you have a plan to exit, if you're wrong, you're not risking 100 grand if you put 100 grand in XYZ. You're risking 3, 4, 5, 6, 7, 10. In extreme situations, you might be risking 15 to 20,000. So if you can think about it that way, it can help you with position size. That's how I don't have any problem putting a lot of size into some of these names, because I know that's what I'm risking, barring some really, really unforeseen circumstances. So back to Druckenmiller, part of the equation is seeing the investment. Part of the investment is seeing myself in a good trading rhythm. Very important. So I like a 10% position in a stock. That's my kind of go-to position. If I put 10% of my account into XYZ and it goes down 10%, the whole account, barring all other stocks being flat, loses 1%. So I can overcome that. If I pull back the whole account 1% in a bad trade that went down 10%, I should have been out sooner, but maybe I couldn't be, like Alibaba gap down. I forgot to show that chart. But I was in BABA and I had a cushion, but it gapped down 10% and hit the bid, done, move on to the next one. No questions asked. I'm out that day. I don't even know what it's doing today because I just out and done. I'm on to the next one. So if I'm in a good trading rhythm, it's 10% to start, move it up to 15, maybe 20. I don't usually have to go more than 20% in a position. The stories like Mike Webster talked about with Bill and Amgen, and he has the whole firm account in that, and he's on margin, and that was the younger Bill. The markets were different back then. And even Justin will tell you that as the money got larger for Bill, his risk tolerance decreased in relation to that. And I feel it the same as well. As I get older and the money gets larger, my tolerance for risk and sizing has decreased. In the old days, I used to, I like XYZ. It's breaking out a whole account, margin account, just whole account in it. Just let's go. Let's go. Let's see what happens. Oh, it didn't work. Wash myself. What's the next one? Whole account in it. And I just don't have the appetite to do that like I once did. So, 20% I think is more than enough if it's including, appreciation in the stock. So maybe of that 20%, maybe 15% of that is your money. It's not whether you're right or wrong. It's how much you make when you're right and how much you lose when you're wrong. I mean, that's an obvious one. I believe in streaks like in baseball. Sometimes you're seeing the balls, sometimes you're not. Back to that good trading rhythm. Sometimes I feel like I just know where the market's going and these stocks are going, and sometimes they just I'm going left and they're going right, and it's frustrating. And you have to recognize that and pull back. So I start with 10% if I'm doing good. If I'm not seeing the ball, so to speak, then I move down to a 5% position and build it up to maybe 10 or something like that. Versus 10 to 20, it would be like 5 to 10 until I start seeing the ball, get back in a rhythm, start making progress. Then I can go back to the 10%. My number one job is to know when I'm hot, when I'm not. When I'm not hot, you need to turn the dial, or I'm sorry, when I'm hot, I'm speaking for Stanley, he says, I need to turn the dial straight up. So when you're going well, you can press if you want, but only if you're going well. And when you're cold, the last thing you should do is make big bets to get even, need to turn yourself down. So sizing is very important. And I don't know if there isn't any perfect answer because I don't think there's a one size fits all. What my sizing would be different than Mike's sizing, that's different than Justin, different than Bill O'Neill, different than Mark Minervini. And a lot of people out there, I think, have a hard time putting on the risk because I don't know why, but I think as they see it as, oh gosh, I have $1 million IRA, I just can't put 100 grand into a stock. I don't want to risk 100 grand. And their mindset is I'm risking 100 grand. Whereas my mindset would be, well, I'm risking 5-6 grand. And if I'm in sync, I'm probably risking less than that. I might be out with a $1,200 loss if it's just not going right. So that's why. And like exercise, if you want to get stronger in the gym, you don't rush to the gym and put 250 on the bench press and try to do that. You put 135 on there and you punch it out 5 times or whatever your number is. 2 weeks later, maybe you're doing 145 8 times, or 5 weeks later, or 9 weeks later, and so on and so forth. So you build up. The mind's like a muscle. Build up your tolerance for the risk and the sizing gradually. You don't want to try to jam it in there because you won't be able to handle it correctly. All right. Hopefully that helps for some of you that have asked about position sizing. 800-831-2525, market surge at investors.com. Have a great weekend. I think I'll be back one more week before we have Harold and Arnie on the end of month webinar. Bye, everyone.